Moreover, even if it cannot be part of the class, you are going to edit Mzungu, is it? Good. So we just have to start this other course. This is now financial reporting. Financial reporting. What did we learn last week when we had the same class? Presentation of financial statements. Good. So what did we say are the contents of the presentation of financial statements? Presentation. What are the contents of the presentation of the statement? One, name of the company, name of the entity. The other thing? It's right, accounting period. Sam, we are talking about that. Are you not in class? Presentation of financial statements. The contents of financial statements. Mona, I know you are not fine. Presentation currency. We are going over on what we had done last week. I'm saying you gave us yes something presented limitations of financial statement. Yes. Okay, good. So, okay, me, I thought we are just going to go over the last time's work that we did and then do the presentation. He should present it. No, Sam is right. Okay, he's right. But I thought we should just first go over on what we learned last week. Then we are going to start presenting. Good. Come again. Yes, that's why I was saying, what else should we is the content of the presentation of financial statements? Sam, Mona has said that one. Dorothy has said. Mona also said two. Dorothy one, is it? One, Dorothy two. So you are the one that is remaining, not mentioning what he is supposed presentation or financial statements. Other things that we supposed to present. You have forgotten. How about the timeline? Timeline also has to be there. Timeline. How about the debt? Have we written anything in connection of debt? So no, debt is not a presentation, it's not a financial statement. Debt is very, very important. The other thing is what? Lounding, level of lounding, good. Level of lounding. Level of lounding. So, how about the notes? Notes also important because it's part of the explanation to non-professionals about what we are reporting. Reporting period, we have written, timeline, also very important. So this is what we learned last week, and we had appreciated an example on the financial statement of position, is it? That one that we did. So our next topic is what? According to the course outline. Next topic. Next topic. Course outline, yes, we should use that. Sometimes we can skip and start the other one, but we should take the same topics on the course outline. Okay, so presentation of financial statements, we just highlighted that, and then we are going now to go into single sub items on the presentation, sub topics on the presentation of financial statements. So before we go there, we just have to go back to what we said we are going to present. So
I don't remember.
No.
So
yes.
It is you, Sam, who got it right.
No, as he's going to be presenting, we are also going to know, okay? Then you are also going to present. Yes.
Yeah.
Yes.
Presentation next week, financial body. Challenges on financial statement.
Yes. Yes. Challenges. Challenges. Challenges.
You want us to keep on doing
Changes on the financial statement.
present.
No, because you know what? We have so many of these, and sometimes if we present, it means because in class we don't learn so many. It will be advantageous to you as well as our friends on the online. So please.
Yeah, but we did last week.
No, we didn't. Presentation, we didn't. We just learned, but I said you should come and present. So,
So some
financial statements analysis.
Yes.
So first of all, I'm going to explain about the financial statement analysis first of all. So financial statement analysis is a fundamental aspect of business management and investment in decision making.
Yes.
It involves in scrutinizing a company's financial statement to understand its financial health and performance.
Good. Good.
So I only have 2 points on the limitations or the challenges of financial statement analysis.
Okay.
So the first one is on the historical data.
Storage of data. Good. Can you explain to us?
On historical data.
Okay, storage of historical data.
Yeah. Basically, financial statements are primarily based on historical data. So
yes.
they provide a snapshot of company's past performance instead of predicting on the future performance.
Mm-hmm.
So yeah, this can be one of the limitations or the challenges of the financial statements.
Okay, good.
The last one is on the last limitation on financial statement analysis is inflation and economic change.
Okay, inflation. In fact, for us to start talking about it, he is the one that talked about not knowing the word inflation, if I remember correctly. Inflation and or what changes?
Inflation and economic change.
Good. Yes, can you explain that so that our friends online should benefit?
Okay, I'll explain this. Inflation and the economic changes is one of the limitations of the financial statement analysis. Money value fluctuations are not taken into account for the financial statements.
Exactly.
So the assets and liabilities can be distorted by inflation, which can provide false conclusions. And yeah, so changes in market conditions are not directly captured in financial.
Changes in what?
Changes in market conditions are not directly captured in
the. Okay. So those are the two presentation ideas that you wanted to share. Good. So we come to Mona. Mona now. It's just additions to what we have already known. This is good to us because when we have known two, Sam has brought again two, it means there are going to be many. Then Dorothy addition of 5, it means 20. Yes. So Mona, yes, Mona. Challenges in the financial presentation of financial statement. Let's go ahead. Interpretation of results as a challenge. Good. Yes.
Or it's biased.
Yes.
That means that our audience also have their own information.
Exactly. Good.
Then
oh, inflation is already there. Good. We can think of even the normal things that we can face when we are interpreting or when we are presenting financial statements. There are so many. So you have added one. Maybe you also think about another one, Mona? Outdated information, good. How can it be outdated? How can it be outdated?
Taking long to
Okay. Good. And then we go to Dorothy now?
just building on this.
Yes.
We are all aware that we need to report maybe for when we are taking the annual report, it means within the next 6 months we need to report, not further than that.
Yes.
So if we exceed that period, it means the information that we are presenting will be outdated.
Yes.
And that will contribute to wrong decisions made by managers.
Good.
They are using or they are based on the as well as when we are taking the monthly reports, we need to report by the 14th.
Yes.
So
of every other month.
Yes.
Good.
If it is further than that, then the information becomes outdated.
Good.
Or affect the decision making.
Good.
And the other point.
Other challenge?
The other challenge is the changes in accounting policy.
Yes, changes in accounting. Policies or principles.
Those will be difficult to be reflected directly in the financial statements unless they are incorporated.
Yes.
Yeah.
Yes.
So that is another limitation. The other one is the limitation of ratio.
Ratio analysis. Good. Ratio analysis. Good.
Sometimes you may consider a ratio to analyze a financial statement. So when you consider a wrong ratio,
yes,
you are going to produce wrong results that will affect the decisions of the managers as well.
Good. So look at that. We are only 3 here. Some we tackled, some we didn't. So these are the good part when you present, because what maybe the points that Dorothy has analyzed or has said were not analyzed or said by some. And this is what I was saying, it's better we should, because this is to our advantage. And not only that, even those that are online, our friends that are going to hear the presentation. So we should be doing that. Look at that. Even if I can say, I want, if it comes on an exam, I say, I want you to discuss about the challenges in presenting of financial statements. It means you're just going to choose maybe 4 or 5, but others are going to be left. But when you are alone thinking about all these, you cannot. So this is very important when we say we should present, we should be doing that, because ideas can be researched and be found, different ideas that can make us be what we want to achieve. Okay, so this is very important that we have done today, presentation of financial statements. I think I should be doing this now and then so that people should be giving us good ideas like this. Imagine on outdated, okay? How Dorothy explained. That is very good because once you present after the period that they have specified, it means it's an outdated information. So this is very good. Thanks so much, Sam. Next time when I say we should present, be reminding these girls. They forget. They forget.
Sam is your son.
Oh, you know what? This was not last week. It was that week, but you were supposed to present last week.
He came late.
He came late.
Yeah.
And when I asked, he said he was not ready.
Yeah.
So he was ready when he... so is he presenting the outdated information?
No. Yeah. But that is
Yeah.
This should be Sam's show.
Yes.
Because he's the only one who did present.
Good.
Thank you, Sam.
Thank you so much, Sam. We thank you because even our friends have benefited out of that. If they had maybe read in the book, they didn't even have all those points that we have found out. So today we're having another topic, which is what? Organization of information in financial statements. Organization of information in financial statements. When I was seeing the subtopic on the presentation of financial statements, the first point, I said, but what did the university want us to know as they are saying this? Organization of information in financial statements. What do they want to tell us?
Is it layout?
That's what I was thinking also, to say, should it be layout? Layout of the financial statement? Yeah. So if it's layout of the financial statement, I remember the last week we had seen the financial statement. Come again? Position that we had looked into our book, and then even the articulation of financial statements. I thought they also fall in the same category. How do you look at that? Articulation of financial statements. Even all those three topics, subtopics that is, on financial statements, I thought even four of them, yes. Organization of information in financial statements, the articulation of financial statements, information flow among financial statements, as well as income statement geography. Income statement geography. So what we are supposed to do on those four subtopics, we are supposed to see how the financial statements are presented and the way we have to follow. Always when we go back to what we had, the page, what page is that? The one that we had the page 38 is 38. 38. Are you there, Sam? 38? We had an example of a statement of financial position. Statement of financial position. So this is a balance sheet, is it?
Yeah.
It's a balance sheet. Okay, so what they want us to know is that we want to know how it is written or how we go about it. That's why they're saying geography or the layout of the, let's say, the financial statement. That's what they want to tell us. So maybe we should do it on the board because our friends cannot see when we don't do it here. So we're saying it's a balance sheet, isn't it? Balance sheet. Balance sheet as at the last day of the year. What is our end of year then? 31st December. 31st December. So 31st December, it means we're going to have 2 years. Maybe we should take 2022 and 2023. So when we are presenting financial statements, and our example is only financial position, which is a balance sheet, it means we should know the way forward of how we should present. According to the example, we start with what? We start with assets, but assets, we start with assets. But if they are assets, we start with non-current assets. Or what? Or what? Fixed assets. So this is the first thing that we are supposed to write. Assets. Assets. Why should we start with assets? Why didn't we start with the liabilities? Why should we start with assets? It's a principle. So we are supposed to follow a principle, even in normal terms, okay? Let me take you, you two girls, okay? I take you in the kitchen. This is a bigger plate, this is a small plate. You can't say this small plate should be down, this bigger up. You start with big things, then small things, and so on and so forth. This is what I just think the people that were making principles or policies on the financial statement preparation, they thought of that. So it is a principle that we should start with the assets, but fixed assets. So here on the financial statement, then we are given what? Only fixed assets. What are they? What are they? What is there? Property, plant, come again? And equipment. Okay, so there it means you are now adding the values of the fixed assets in the first row. So here it means they're saying that the property, plant, and equipment is how much? What years were we given? 2001? 2007 and 26. 2007 7 and then 6. Like that. So we are saying how much was the total fixed assets in the 2007? 315,000. 350,700. How about 2003, 2086? 360. Come again?
020.
020. Like that. Good. So this was the total for our fixed assets that we have narrated below: property, plants, as well as equipment. Then the second one is goodwill. We're talking about goodwill being our fixed assets. Why should we take goodwill as a fixed asset? I remember we discussed about this the other time, but for the consumption of our friends online.
Reputation of the company.
It's a reputation of a company, yes. That's the meaning, but why should it?
Value.
And it's valued. Why should it be on fixed asset? Why not below on current?
It stays with the company for long.
It's okay. It stays with the company for long because that's the reputation. Okay. So it's an intangible asset, is it? So goodwill, how much was goodwill in 2007? 80,300. 80, like that? 800.
80,800.
Or 800, like that. Then on the 2006, before that year, 91,300. Why should it drop? This year it was high, this one low. Okay, they reviled it. Okay, good. Maybe the other thing, it can be maybe they lost a bit of their goodwill. Somebody maybe, losing the goodwill is very easy. Sometimes somebody can steal. People can start saying, but why should they that? Or you didn't convince a customer was disappointed. Yeah, so then the other one is the other intangible assets. Goodwill on its own, but other intangible assets. This can be what? Called copyright, patent. Good. So other, come again. Yes? Oh, good. So these are some of the examples of other intangible assets. And then that is what? 100, is it? No, 227. Is it 227?
Yeah,
227 470. 227 470. How about 2006? The same. 227 470. Then after other intangible assets, we have investments in associates. Investments in associates. How much is it? 100,000, 150. How about this other year? 70.
77.
Okay, 770, like that. Okay, then after that, we come to available for sale financial assets. Available for sale financial assets. Available for sale financial assets. This can be what? I remember I talked about this. Available for sale financial assets. Mona, we can have a company as for. Mona is a specialist maybe in installing engineering materials, but is in our company. We made her go to school and then was qualified. But there are other companies or other organizations that want to be assisted by Mona, but she's working with us. So that again is an asset because it's something that is in her, but we had done that. I remember the other person, I don't know whether it was in this class or the other class. We were saying, no, it wasn't in the class. I think it's outside the class. What happened was somebody wanted to pick her for work. So when she went to disclose at her organization to say they want to pick me, so they said, no, we had taught you to be what you are now. So you have not yet finished the period for you to be dispatched away from this organization. So look at that. It means somebody is taken as an asset at that organization. That's, yes. Yeah, no. Investment in associate. Available for sale financial assets, not that. Mona, you wanted? Like how auditors come together. Like as a company. Now they go as a company. It can be like that. But those, it's a company putting them together, investing together. But here we're talking, you are not investing with us, but you are a worker in the organization. Okay? You get the point? Yeah. They are supposed to be 200 and 300. Goodwill. I thought goodwill is what? 8. It should be what? No, there. 91,300. Supposed to be 200. Okay. Okay. So you were explaining about available for sale financial assets. Yes. What about investments in associates? What are they? I thought investment in associates is that we are a company, okay? We are in association, okay? So when we are talking about that, it means we have got investments. We can think about, let's say, we can be thinking about, let's say, in a company where we are making maybe, we are making bricks, maybe like that, bricks. So we want to buy a machine that makes bricks. Then we are going to put our money together as a company, as 4 of us. Then that money, we're going to buy something. So that's what I think that maybe we should do that. How about what you are finding out? What are they saying? Investment in associates?
an associate
Mm-hmm.
entity
Yes.
over which an investor has significant influence,
Mm-hmm.
being the power to participate in the financial and operating policy decisions
Yes.
of the investee,
Mm-hmm.
but not control or joint control.
Okay, it means he has invested in the company, but he's not part of the company. That's what they're explaining, isn't it? I thought you have exactly asked or seeked for investment in associates.
Yeah,
Are they not giving us examples? Are they not giving us examples on that?
on this one, there is no example.
Okay. Mm-hmm. Mm-hmm. Sam, what are they saying?
It says,
Mm-hmm.
IAS 28, investments.
That's International Accounting Standard number 28 is going to explain about that. We just want to understand well. Yes.
Investments in associates
Yes.
outlines the accounting for investments in associates. An associate is an entity over which an investor has significant influence, being the power to participate in the financial and operating policy decisions of the investee, but not control or joint control. And investments in associates are, with limited exemptions, required to be accounted for using the equity method. So ISA 28 was reissued in December, I think.
No, they're saying the same. You know, it's the part of the investment that somebody has put in, but is not part of the organization. For example, you bought shares from National Bank, isn't it? Yes, but you are not controlling those. Somebody is controlling them. So that's what I explained to say maybe they put the money together and then buy something that is an asset for that company, but they are not part of the company. So this is an explanation on the investments in associates. In a meeting, we'll come back to you, sorry. Is it urgent, my dear? My daughter. She phoned, I said 12 o'clock in 12 minutes, and now she's saying, come again?
We can talk to her.
Then I have to take this one off a bit. So we are saying now current assets. It means now on fixed asset, we're free. That is the first entry in the balance sheet, and then seconded by what? Current assets. Current assets. Current assets. So, on current assets, according to the example given to us, is that the first current asset is the inventory. I remember this morning we were talking about the inventory being an asset or not being an asset. I remember that. Yes, so here there are current assets, inventory. So on the how the balance sheet is written, it means we start with assets. After assets, the first type of asset that will enter in the balance sheet is the non-current assets or fixed assets. Then the second current asset, the second is the on asset is current. We started with fixed and now we're on current assets. So on current asset, we have the first entry, which are inventories. We're given the amount there according to our balance sheet for the 2 years that we have started. And then we have the second entry being the trade receivables that is there. I'll finish at 2 o'clock and then we knock off. Thank you. Good. I'll be there by 2. So this is, come again? Yes, I know. When I was answering, no, but when I was calling my daughter, it's going to be edited anyway at the administrative office. Yeah. So, what are trade receivables? What are trade receivables?
These are near cash that or the expected incomes that we are receiving shortly.
Mm-hmm.
For example, maybe we sold goods, credit, then we are expecting to receive quickly.
Okay.
Those are the trade receivables.
Good. So trade receivables are cash that we're expecting in short term. That's why we have written them on the current assets. Other current assets, what can this be? Other current assets, what can this be? Other current assets. If the inventory were not there, we would have thought of them. But what are other current assets? What can this be? What can be these? The other current assets? Other current assets? Sam? See what are other current assets? Other current assets. Okay. Other current assets. Other current assets, please. What are they? Other current assets. What can this be? Any cash may be in connection of us receiving. Apart from that, the cash we're expecting that we made business with our friends. Isn't it? What are they saying? What is it? Other current assets, Mona, what can this be? Examples of other current assets in the balance sheet. We have talked about inventories being current assets. Yes, we accept. Trade receivables, yes. What we expect to receive that we had done business with the other people or companies, yes. How about other current assets? What can be these examples of such? Cash in hand, but there's below there is cash and cash equivalent. So, so yeah, it can be cash, but not cash in hand because there we have already. It's another set of that. But other current assets, other current assets. Other current assets can mean what I said to say. We have people that are professionals, we made them to be professionals, but they can, again, be called for them to go and contact a service and our company to be paid. You get the point? I said, I gave an example before we had started the articulation of the financial statements. I said that sometimes a person can be employed in a company, but you made him or her. I gave an example of yourself to say we had taken you to school and then you are now a professional, maybe you are an engineer, that your services can be wanted by other people or other companies, okay, to say you should go and do that and the company is going to be paid. For example, come again? They own you, yes, that's how it is. Yes, that's how it is. I remember I even gave an example to say somebody wanted to leave the company, but the company said, no, we taught you. So you are what you are because of us. So you are not going to go out from the company unless you reach such number of years. So this happens. And don't go and get surprised when they have taken you to America to go and be taught, and then when you come back, you try to leave the company because more companies want you. They will say, no, you cannot leave. They can even sue you because they had made you to be what you are. So these are some of the things maybe we can think in those lines. What are they saying, Dorothy?
I'm saying the other current asset account listed on the balance sheet and is a component of the firm's total assets. So other current assets are liquid assets that are characterized as uncommon or insignificant. They are listed on the balance sheet alongside other assets and are convertible into cash within 1 year.
Good.
So because these assets are recorded rarely or are insignificant, the net balance in the other current assets account is typically quite small.
So you look at that.
But they haven't listed like
examples. No, but we understand what they mean. In fact, it will depend on company to company how you make your articulation of your financial statements, as we already said. But this is the one that we teach in class. But sometimes the organization can want its own way of how you should present it. But all in all, it's just the other cash apart from those listed above and below. Yes, which is not common. Sure. Then after that, we come to the total assets. We are supposed to add the fixed assets, all the fixed assets together with the current assets for us to have the total assets according to the geography of the financial statements or the articulation of the financial statements, and we're giving an example of statement of financial position. That's the balance sheet. Then the third entry is about equity and liabilities. Equity and liabilities. So when we're talking about equity and liabilities, we start with equity attributable. Equity attributable. Equity attributable. What is equity attributable? What is equity attributable?
These are the things that owners of the company put together.
Yes. Those are the amount, the capital amounts that have been put together by the owners. By the owners. These are current assets. We have started a company, and 4 of us, and then each one of us gives in his own amount, and then that is what is put together, and then is what is called equity attributable.
So in this case, because they are putting under, is it that these equity attributable to owners of the parent, maybe they just kind of placed that I will contribute this much, or take this much shares that they haven't yet given. Okay, what does it mean?
So equity attributable, they can be shares. Okay, you are given a share. You say, no, I don't want to take it. Or a dividend. You say, I don't want to take it. I just want to put it to my capital. Mind you, when we are talking about a company with shares, it means they don't give in the same amount. For example, you give in how much? We have a company of us 4. How much do you want to give in to this company?
4 billion.
4 billion. Wow. Mona? The benchmark has been so high. Yes, Mona?
Okay, let's talk. 1 billion. No, it's fine. 1 billion.
1.
1 million.
No, they should be different.
Okay.
2.
2, yeah.
I will be giving 500 million. Okay. So these are our contributions. So as our contributions, I've given the less than everybody of you. When they have given me the dividend, I will say, no, please, can you put into my shares so that it should go up, as that I should reach 1 billion. You get the point? Yes, I should also have a bigger share, because when you are talking about shares, it means when you are dividing, you are giving out dividends, I'm going to get less than everybody of you. So I want to be there also. And mind you, the one who has got a bigger share is the one that is the controller. You get the point? Yes, if we remember those calculations of accounting. So